Well, hello and welcome. We are live. This is the 2021 Investor Insight Series sponsored by PNC. Today's event is Product Market Fit. My name is Todd Fetterman, and I'm the Managing Director of North Coast Ventures. For those of you not familiar with North Coast, we are based in Cleveland and made up of over 350 individual investors across 6 different funds. These funds include both angels and more traditional venture capital funds. And we invest in typically B2B, software as a service, technology ventures. Before we dive in and get started, we'd like to take a moment and thank PNC, our sponsor for today's event, and our sponsor for the full 2021 Investor Insight Series. As many of you know, PNC has a strong commitment to economic development and the entrepreneurial community, so it really is a natural for them to support an event like this. Over the past several years, I've had a chance to get to know Pat Pastore, PNC's regional president, as well as John Beer, who leads PNC's wealth management group. Can't say enough about the support and partnership that they've provided to the entire North Coast family. So please do know that I'm always happy to make an introduction if you have questions about your personal wealth management needs. And we thank PNC again, not just for their sponsorship, but for their continued partnership and support of the broader innovation community. We'd also like to take a moment and thank the Innovation Council of North Coast Ventures. This is a group of 30 plus organizations from corporations, universities, hospital systems who have contributed time, energy, and capital to support North Coast, our portfolio, and the startup community in general. As we think about product market fit, this is a group we often go to for expertise, for voice of customer, and for insights into how to best open doors to help accelerate our portfolio companies. So we thank this group again for their commitment to North Coast. Well, I'm excited to talk about product market fit today. I think we all know that companies should make things that customers want, should make things that customers will use, and make things that customers will value. That sounds very simple, but it can be pretty hard to achieve in reality. Amazon happens to show over 250 books on product market fit. Some of the best known titles are like Crossing the Chasm, Lean Startup. They devote a significant portion of their pages to product market fit. But as an indication of just how tricky product market fit can be, a recent CB Insights analysis of over 1,000 failed startups that looks at postmortems demonstrated that the number one factor cited for seed stage failure is, quote, no market need. No market need in companies that have been formed, launched, and funded. I think that really goes to show just how challenging it can be to understand the customer needs and dynamics in such dynamic spaces. I think that says a lot, and I think our conversation will shed light on how we can help decrease the likelihood of this happening in startups that you're part of or that you're invested in. So with that, I will stop the screen share and ask our panelists to turn on their cameras and to join us. We're really excited here to have Mike, Samantha, and David with us today. They are part of the startup community in Cleveland, part of some really interesting and dynamic organizations here. And I know will give us some really good perspective on product market fit. So we'll take just a moment, ask each of you, starting with Mike, just to give a brief background on yourself before we dive into some questions that I will serve up and ask. Then we'll also keep an eye on the chat for some topics that others have, and we'll try to incorporate them on the fly. But with that, Mike, the floor is yours.
All right. Well, thanks a lot, Todd. I appreciate that. And yeah, really glad to be here. As Todd mentioned, I'm the co-founder of a company called Product Collective, and we really view ourselves as a community for software product people. That's really what we do. Now, that means a number of things in that we have a newsletter that goes out to 35,000 people every Friday. We run webinars and video chats, have a really active Slack community. A lot of people know us for our conference series. We run Industry, the Product Conference, and now the New York Product Conference, which is a company we recently acquired. So that's what I do sort of day to day. We have a lot of fun with it because we're product people ourselves. I'm also co-host of a podcast called Rocketship.fm, which I've been doing for the last few years. I'm an adjunct professor at Case Western Reserve University, having introduced and taught their very first undergraduate product management class. which is a lot of fun. I teach it every fall, including right now. And I'm also one of those 350 investors that are part of North Coast, and that's new for me, but it's been fun for me as well. So that's me.
Well, with that, we'll transition for a moment just to Samantha, and tell us a little bit about yourself as well.
Sure. I am Samantha McAloney. I'm happily one of the 30,000 subscribers, Mike, to your newsletter. So thank you for that. Um, I am also Cleveland born and raised, very proudly so, and have spent the last 20 years in healthcare tech, mostly either on the engineering side, engineering management, and the last 10 years as the head of product for Within 3. Thanks for having me.
Terrific. And David, we'll ask you to bring it home on the introductions.
All right, you got it. So I'm David Morris. I'm currently the Chief Marketing Officer at Proformex, which just happens to be a North Coast venture portfolio company. So thank you, Todd and team, for believing in us and our mission. At the highest level, it's fun that I actually get to tell you what we do, because we actually revisited our product market fit and our messaging over the last 2 months to really hone in on it. But we build solutions to help independent advisors attract, nurture, and grow their life insurance business through client policy holder servicing. So it sounds super connect, but basically what we're doing is we're bringing visibility and automation into a very laggard industry, that might be the best way to put it. So we're super excited, and this is a great topic for us to talk about. My background: I'm Cleveland, went to high school here, lived here most of my life. The last 20 years, I've been a serial entrepreneur, investor, board member in a bunch of SaaS companies, and been in the SaaS tech space. So in every level, from like I said, board member, investor, to getting my hands dirty day in, day out, get to live and breathe and see a lot of fun stuff and work with some great people.
Terrific. Thank you. And we will dive right in. So Mike, we'll start with you as the founder of Product Collective. You are uniquely suited to give us a proper definition of product market fit. So help us set the stage.
Sure. Yeah. And it's a confusing thing, right? Because it's not like one of those things where, as a product person, as an entrepreneur, you're going about your day, and then all of a sudden a notification pops up on your phone. It says, "Congratulations, you found product market fit." And you're like, oh, great. I guess we have product market fit. So it's one of these things that we have to feel out. But I think it was Mark Andreessen that sort of gave what I consider to be a pretty good and maybe succinct definition, which is that when you're in a good market and you have a product that sustains that market, that satisfies that market, you have product market fit. So I think very shortly, that'd be one definition to go with. What I think that means is that you found the right customers to serve. You have a product for those customers, the right product for those customers, and that you're seeing proof in the form of sustainable sales, and not just growing sales, because you could grow sales in a very unsustainable way. We've seen big companies do that. Some of us have experienced, our own startups have done that. But I think when you are seeing that sustainable sales come through, that's a proof point. It is one of these things that as you're going about it, you can feel when it's happening and feel when it's not. Like when you're at a point where you're raising prices and customers are still coming on board, they're not churning out. That's a great sign that you have product market fit. On the other hand, if, just growth isn't happening, if there's other, nobody's talking about your product, it's really hard to keep customers. It's a sign of not having product market fit. So anyway, the definition, a couple of signs of what to look for too.
Terrific. And then Samantha, you mentioned you've been Within 3 for 10 years. And so I imagine that, like any good journey, it's not a straight line. So tell us about the product market fit journey that you've had there.
Oh no, at some point in the last year, I heard somebody say that it takes 10 years to be an overnight success. And that was 1,000,000% our story. We started back in 2007, 2008, properly as Within 3. I joined in 2010. And we spent that first few years really deciding on, where to focus our technology, right? Because that's the first part of the product market fit journey. If you start with technology, is where do we focus this thing? Because if you go too broad, you're not going to ever get product market fit. So 2013-ish, we really focused on our product that customers loved. So we did a lot of prototypes before that. We had a lot of kind of early adopter sort of customers on a variety of things. And there was one that clearly customers were getting a lot of value out of, and were coming back for more. It was not the obvious product. It was not the most software as a service product. There was a lot of things going against it, but people absolutely loved it. And once they bought it, they bought more. So that's where we focused. It was a very difficult decision at the time, but one that has served us really, really well. And, years after that, then, once the uptake was more and more and more on that front, we just started allowing customers to use it in more ways, to use it across the enterprise with more clients, with doing different things with it. We are a virtual collaboration platform for life sciences companies, so pharmaceutical companies, medical device companies, to engage with physicians, patients, payers, even internally. And as you can imagine, that growth was going up and up and up, and then COVID came, and having a great virtual collaboration platform in a pandemic will speed up your growth pretty significantly. Yeah. Luckily, though, we had a great base to go from. We already knew, like I said, when customers used it, they'd come back and use more of it. So really, that just bumped our growth up maybe by a year or two. But we did that. We raised a big round, 8-figure round in September of last year, and now do even bigger and better things after we've acquired other companies. So really, that product market fit, came in that area after we decided to focus. But when we realized that traction with customers loving our software meant that they would buy it, sustainably buy it, to your point, Mike, buy more of it over time. And it just, from there, it's really been a rocket ship. So that's been our experience, but it was not an overnight experience.
I hear you. And David, just kind of reflecting on Samantha's answer, it sounded like part of the journey started with just listening to customers and trying to understand the value they were seeing versus kind of prescribing it. But I'm curious, what you find are the best questions to help prompt the things to listen to, right? And how you can start a conversation to get meaningful feedback from customers.
Yeah, so they're great questions. I think everybody who here today there's probably a bunch of similarities in the questions and nuances to how they ask them, but we all kind of want the same thing, but in a different way. There's 3 that I have that are go-tos that I read in the book a while ago, and I just there's sub questions from each one, but the 3 that I usually go to, the first and most obvious is whether we're solving our own problem or we're looking to invest in somebody and they're bringing a deck to us, we're like, what problem does your product even solve? Right? I mean, like it's a fundamental question, and you can drill down from there. Like, tell me about the product you're solving. What's the hardest part about the process you're improving, et cetera, et cetera. But that first question is, what is your problem? What problem does your product solve? The second one is, okay, that's great, you're solving a product, but who are you? Who's your target? Who's your audience? Right? There's all sorts of things like different names for it: golden profile, persona, segment, whatever you want to call it. But who is it? And like, how big is that audience? Is it even worth going after? So you have what does your product solve? Who's the audience? And then what's your value prop? Like, it's all good and it's there, but is your value prop money? Is it time? Is it money? Is it efficiency? Is it just cool and people are going to adopt it because it's just the hip thing for now? Why is your product better than company XYZ, et cetera? But those 3 questions, fundamentally, if we try, I try to keep things very simple and straightforward. Less is more. So if I can keep our focus within those 3 things, and then drill down from there, I think that kind of gives it a focus to see where we can go and move try to get something that people want to buy and engage with and become raving fans.
Great. So Mike, you mentioned earlier that you founded a company much earlier in your career, and you raised capital from individual angels, angel groups, venture capital funds. As you look back now, kind of how has that experience informed your perspective on product market fit?
Yeah, it's interesting. You're right. So I co-founded a company a while back, actually 10 years ago, which doesn't feel like it was 10 years ago, but it was actually 10 years ago, a company called eFuneral. And yeah, we went the route of raising money from different investors, different than my company now, Product Collective, where we bootstrapped our company from the very beginning, never raised any outside funding. Another big difference is with eFuneral, we never found that product market fit. with Product Collective, I feel like we found it pretty quickly. But so now having had that perspective of going through both types of companies, the investor backed and bootstrap, I think, funding can help you get to product. It has the potential to help you get to product market fit faster, in that you have more resources to use. And so I just think about, the experiments that you're running when you actually have the resources to run experiments. Those experiments, that experimentation you're doing in the beginning, it's meant to help you get to the right place. I mean, usually companies, Samantha sort of illustrated it with her experiences within 3. It's usually not the very first iteration or the very product that is ultimately the one that is really, really successful for any big successful company. So you often need to experiment and iterate and continue to get to that point. When you have resources, it gives you a little bit of ammo to be able to do that. So that's good. It could get you in front of more customers so that you could get feedback from those customers. That's good. However, it also can cloud some things. So sometimes when you have that investment, you might look at pure sales and you might see sales going up, and that might be in your mind a great sign and a sign that you're in product, you've found product market fit. However, I mentioned before the sustainable sales part. If you're using all of those resources on marketing, I sure would hope that you're getting some sales out of that. But if it's not sustainable, you haven't really truly found that product market fit. I think another big area where, I don't know about clouding things, but definitely puts the pressure on, is that there is pressure, whether it's sort of coming from investors directly or not. There's pressure on the founders to find it quicker. So I'm not saying that an investor-backed company, the investors are saying, you got to find it right now. Maybe some are, but there's still that pressure, right? Like the founders want to do right by the investments. The founders want to get there quicker. They know that those investors want to see money back. So I think there's just a couple different nuances when you are an investor-backed company versus one that's bootstrapped. That's kind of what I went through in my experiences.
Excellent. And Samantha, the team at Within3 just has a really strong reputation. And as you look at the product and the technology team that you've put together, what are the characteristics of those actual human beings, right, that you find most crucial to actually getting the job done, doing this kind of listening and learning and achieving product market fit?
Yeah. I was been thinking a lot about this, and been lucky enough to work with people that are so capable and so smart that I almost take that part as table stakes now, the technical acumen, the product acumen. And I think the part that makes the team that we have now, who is a fantastic team, like you said, is the fact that they are ego-free, very collaborative, and very empathetic. And so, the listening to customers and the iterating and the working together well and the sticking together during those 10 years when, times were sort of up and down before we found product market fit, really, really served us well, those characteristics, as well as being incredibly tenacious. And now that we're at a point where we're just, scaling like crazy, it's also the same sort of attributes that are really keeping everything together. I know a lot with the economy right now, we have, sister and brother companies that are losing people quite a bit, right, to other positions. And we just don't see that, because we do have that very collaborative environment where people just like to work and just like to work with their coworkers. So that's really what's led to a lot of our success.
Very good. Then, David, you've worked at companies, big and small startups, companies that have started small and gotten bigger. And I think some companies that have maybe a really centralized buyer versus kind of a disparate group of individual users. And feel free to take this in the realm of, individuals versus group, product-led growth versus kind of more traditional. But how do you think about just how product market fit differs for different types of companies, whether there's a centralized buyer, user, or something more disparate?
Yeah. So it's an interesting question because, as a startup, and goes back to Mike's commentary, like where you're at in the spectrum of, are you bootstrapped? Are you the person or two of your partners where you're funding the whole thing yourself versus being backed by a lot of dough and be able to make a lot of mistakes? And so, you have a launch strategy and a growth strategy. On the disparate area, do you need to which might be easier. It's one decision maker or two decision makers. It's a shorter sales cycle. You have the ability to learn and quickly adjust, but they also could churn, right? Versus the enterprise or a centralized where it's a much longer sales cycle. As an individual bootstrap, you're looking, you may not be able to wait 12 to 18 months to reap the rewards of a massive deal. You have, so, and even though those might be super sticky. So it's the differences in the two, you have this, how do you get out of the gate, depending on where you're at from a financial standpoint. Do you have the money to sustain time to go after the bigger ones? Can you use the centralized or enterprise level deals to go downline to the SMB or the disparate channel, which we do that where we're at right now. Proformex, we did it at our last company at MacroPoint. But you got to get the sales over here. How much of your time is spent getting the initial revenue and the pressures from the investors versus when you're bootstrapping it yourself. You're like, all right, I'm going to weather this and throw a few more dollars in there. So you have to understand where you are in the moment. And you're asking yourself these questions all the time. And this ties back to, the listening to your customers. What we found a lot of times is, and probably jumping ahead a little bit to some of the questions later on, but, as a startup, especially, you have an idea, whether you're the founder or whether you're on the exec team, you have an idea of where this company is and where you want it to go. And it's funny, if you do a really good job of listening, the market will tell you. It'll tell you, what when you talk to your customers, they'll inform you what what are their pain points and what are the things they want to see. And so all that, I know that was like a very long-winded, muddied answer, but if you throw it all together, it will help channel you down a path that will help you decide which strategy to go after and then make the necessary adjustments as you move forward.
Terrific. And so, Mike, you mentioned before 35,000 people on the list. You do these events here in the US and, internationally. So I think you've probably had a perspective on entrepreneurs and product people from across the globe. Is there something here when we think about the Midwest you feel we should know, need to know, might be missing from just the broader perspective that you have on product and product market fit?
Yeah, that's something I've been thinking about lately. The reality is there's great product people here. I mean, I meet great product people here all the time. I mean, Samantha's one of them, right? So, but it's, I think a difference is just, we don't necessarily have the sheer volume of product people here, but that's probably a factor of not necessarily having the sheer volume of tech companies compared to the Bay Area or compared to New York City or what have you. I mean, I'll say I'm really encouraged by, I had a conversation. This is maybe about a year ago is when I first connected with this person. He's a product person, a product leader at LinkedIn. And he told me how, he's from Cleveland and actually planned to move back to Cleveland and is now making his move back to Cleveland. I mean, we're seeing so many companies being remote focused now. It's really opening up things, bringing a lot of people back. So I think the question of do we have a big product community? Well, it's probably not as big as other places, but my friend Sean Leitner runs the Cleveland Product Meetup. I mean, there are product people meeting and discussing ideas just like there are in other places. Again, just maybe not the sheer volume of them. But I think if we can just appreciate, what we do have and kind of build on that, I think it'll be a great thing. I think we're going to see even more people that will set up shop here that maybe they couldn't before because they're working at companies where, again, you had to be into the office. But yeah, now everybody has choice now that we're living in this sort of remote first world, so to speak.
Yes, very good. And then, so Samantha, you alluded to it before. Within3 recently raised a significant round from a very well-known, billion-dollar private equity fund, and I can imagine the diligence that you and your team went through was substantive, to say the least, and that a good portion of the diligence probably centered around just their understanding the product, how customers are using it, the value they received. Can you just give us more of a sense of, at that stage, how investors are thinking about product market fit and what they want to really know and understand?
Yeah, absolutely. They certainly want to see that the customers that we have and had historically are growing within themselves. So, we have that positive retention. Our gross retention is, very high. They want to see that people come back and buy more of it. They of course also want to see the growth rate with new customers. I mean, that is their Insight Partners is who we partnered with out of New York, and they are very much a scale up software organization. So they want to make sure that that growth rate is going up, up, up. So they kick the tires on that. Want to see historical evidence of that. In that process, they talked to us and dug very, very deep with us into our products. But they also talked to our clients who we provided. They found clients of ours that we didn't provide. They went to a very significant level of depth to make sure they understood sort of quantitatively how we were doing, but certainly qualitatively from our customers' point of view to make sure that fit was right and it's what they were seeing on paper. So they did, you're right, pretty significant, diligence in all of those regards.
Yeah, and you mentioned quantitative. I'm curious of all the metrics, right, that investors like to look at. Often, CAC and magic number on acquisition, and utilization and engagement, retention, right, as far as when things are more mature. What kind of metrics were they most interested in understanding?
I would say, it was pretty good amount of breadth there, but I would say, magic number for sure. And certainly, the growth was the more important factor than the profit, for them as investors. And, certainly the retention was a factor with them and other firms that we talked to, at the time as we were doing our exploration.
Great. And so, David, some of these insights just have to come about from sage wisdom and maybe getting beat up a little bit in the real world. But is there something you distill for maybe first-time founders about the process around product market fit? And if you can't think about everything, you can't ask every question, what really you want to zero in on, especially at the very beginning of a venture?
Yeah. So it is like anything, right? The longer you're around, the more you learn from this stuff. So the first thing that probably comes to mind whenever, whether it's Proformex or any investment or anything we get involved in, the first thing I tell somebody or we jump into is this shit's really hard. Startups are not for the faint of heart. There's a quote, and I wish I remembered who said it, but like entrepreneurship or startups, it's living a few years like most people won't, to live the rest of your life like most people can't. And so whatever you think, however long you think it's going to take to get product market fit, however much money you think it's going to take, just a rule of thumb, do all your math, do all your stuff, and then double it. Okay. And then, because it's going to take that much time, we've all had similar experiences. One of the first companies that I ever had any real success with started out as one thing. We had no traction, there, like Mike was saying, there's not even metric. You just know when it's going well, and then you know when it's not going well. And we did a 180 pivot, which ended up becoming an e-commerce company that originally started off as a cost per click. Like nowhere in the universe, the way we started the company, we thought we were going to go make $1 zillion, ended up being where we ended up. And so it's a continual cycle of improvement. You have to be really good at communicating. Communication is your friend. You got to surround yourself with really smart people who are willing to work their butt off. And get all the feedback and be really thick skinned. Like you gotta understand and you want the bad, because you're not going to get anywhere without the honest, critical feedback. That to me is, the biggest piece of the advice. We could drill down a little further and say, hey, focus on a single segment, for lack of a better term. Don't try to overextend and hit 3 or 4 segments at the same time. What's single value prop when you're measuring? The one question we like to talk about product market fit is a lot of people are familiar in crossing the chasm, and a few others. The 40% rule, where if you get to the point where 40% of your customers say they would be very disappointed if they no longer had your product, that type of thing. That's a really good rule of thumb if just from a measurable that we live by in all our companies. And at the end of the day, right, just don't avoid complacency in anything you can, right? If the plan's not working, change it. You know, I'll leave you this, like our motto at MacroPoint, the company before this that we were at, we just kept using the word keep chopping. Like no matter, we didn't care if it worked or it didn't work, but we had to know if something was working, however that was. And so just keep chopping 100 miles an hour and somehow you figure it out.
Yeah. No, that's all really good stuff. And, you know, one thing I'll just focus in on is you're kind of commenting about wanting to hear the bad, the good, and the ugly. It's really hard sometimes to convince people that you really do want to hear those things.
Yeah.
I think in a startup, and also I'd say as an investor, sometimes it's easy for an entrepreneur to tell you what they think you want to hear, to give the best version of the truth, when in reality, as investors, we just want to know what's going on, right? Because we can potentially help, not always, but we can potentially help if we're able to, you know, index some insights from one company to the other, see data that's, you know, the truest data, not necessarily of the 6 ratios, what is the most positive spin on kind of what's going on. But if you can create that culture of openness and candor, it does go a long way towards at least getting those issues out on the table.
Well, and I'll give you guys a plug. We have one of your folks, Alan Brenner, on our board, and he is, you know, we look at our board members and our advisors, not just our customers, but as people that we want to challenge us, but are there to help us and help the company. So in that vein, you know, there's a lot of trust that has to go back and forth. Like, you know, a lot of boards have people on there that are, you know, they're looking to get you, for lack of a better term. Mm-hmm. But there's also, you know, we want the partners that are like, we are transparent. Look, we're failing at this, and we're, I would say, running out of ideas, but we want to take on your experience. And Alan, along with Mark Burns and some other of our board members, have been like super helpful in helping us, you know, navigate things that we just don't know or don't see, or we're blinded by the day to day. And, you know, we continually ask on an ongoing basis, what are we doing wrong? Like we're having difficulty in this. What have you learned in your history? And if you're not willing to do that, don't bother. Like, it's just that simple.
Yeah, absolutely.
Yeah, I actually agree with that. From my point of view too, you know, we had a board that was, you know, mostly Cleveland area investors. We were very lucky to have for a very long time. And with them, we were incredibly transparent. They were very, very helpful. And we took that same ethos into our new board, which is, you know, primarily Insight Partners. And they have been absolutely wonderful because we are very forthright. You know, we're not trying to hide anything or make anything rosy. It is what it is. Let's work on this. And, you know, that's the best kind of partnership to have, certainly.
Terrific. Well, I'm going to keep going with questions here, but for those of you who are listening, feel free to put any questions you have in the chat. And just to mix things up, Samantha, Mike, and David, if you have questions for each other, feel free to just fire things from, you know, one Brady Bunch square to the next. But I might ask just for Mike, right? I don't know how many speakers you've been with and seen, and you've probably just heard a ton of killer insights, right, from different product people. Can you just share, you know, maybe a favorite or two with us?
Yeah, I mean, there's a couple that kind of come to mind. Although I will say, you know, and sometimes we look up to experts. That's why people come to our conferences. And at the end of the day, though, sometimes these experts, they don't have all of the magic answers either, right? Like, I've had private conversations with some of these people that are on stage giving these amazing keynotes, and it's like, hey, so yeah, like product market fit, so you've got it figured out. It's like, you know what? This is what I believe, but I don't really know if this is the, you know, so I would say, you know, just everybody should keep that in mind, you know, especially with something like product market fit. It's something that's not so simple to say, like, this is the definition, so go follow this, go do this, and you'll get it, right? But anyway, I will say, and we've done so many now, I might mix up who this is actually coming from. So I won't share who's shared the advice, but I'll share pieces of advice that stood out to me. And actually, one of the things was mentioned before about the types of feedback we get, or the types of data we're collecting, the quantitative and the qualitative, because this is often a debate that comes up, like, which is better, quantitative or qualitative? And I remember one of our speakers one time saying, and the answer is yes, that is the answer of what's better. You know, we should be getting both. The quantitative, yes, I mean, there are certain metrics we want to capture that. Every business is different. So every key metric for one company might be different for the other, but that doesn't give you the why, right? Like, so it might give you the answer of a what, but it doesn't give you the why. Talking to customers constantly, that's what gives you the why. So you might uncover, your key metric is going up or down, whatever it might be. But unless you're constantly having those customer conversations, you don't really have the proper context. So making sure that you're focused on the qualitative feedback just as much as quantitative feedback. That was one thing. I think the other thing, and this has probably come up so many times, so I'm not going to credit it to any one person anyway, but it's just the customers, they can't tell you what to do, right? Like, and that's the Henry Ford quote that Henry Ford actually really didn't say anyways, but that he always gets credit for the, like, if I wanted to, ask my customers, I'd have built a faster horse. But so yes, customers can't tell you the exact product that they need or the exact solution, but they know their pain points really, really well. And that's why it is important to stay in touch with them constantly. Those pain points change over time, especially these days, like when things change so fast. What's really hurting them hard today might be a lot different than what it was a year ago. So it really is important to stay close to customers. So those are some things that sort of rise to the top for me.
No, that's helpful, because you're right. Things do evolve, and I think sometimes there's a focus on how they evolve positively in times of change, like some of us experienced in COVID, and that happens. One of the ways it can be negative, though, is just that as other things rise, right, the focus of customers can narrow. So something that used to be a priority isn't a priority anymore, and it's not that it's not important. It's just that they don't want to talk to anybody about it for the next 6 months until they figure something else out. And
Right.
part of where just being nimble and listening is really careful is a good thing, because sometimes I think the answer is there's nothing you can do about it right now, right? You've got to take a break, do what you're doing, right? And get to a point where in the future, the things kind of shift back to you and what you could control and what you're good at.
Yeah, I mean, I think you're right on, Todd. I think it's one of the reasons why we've actually not just survived COVID, but actually during, since the onset of COVID, our business has actually improved. Is that when COVID struck, I was in Dublin, Ireland. And when I say that, I mean, like, I'm thinking of mid-March specifically, right? Because it's like, we saw it coming and it was around for a while, but March 11th, I think, was the date where, like, the NBA got canceled, Final Four canceled, Tom Hanks has it. I remember it was all the same day because it was the final day of our European conference in Dublin, Ireland. And I was worried I wasn't going to be able to get home. And I remember the plane ride back thinking, do I even have a business anymore? Like, people aren't going to be going in-person conferences for quite some time. But I think the reason why we were able to flourish during that time is we've always stayed really close to our customers. And so we knew that, well, it's, yes, the solution of how they solve these problems that they had, that will need to change, but these problems are evolving and we kind of can see how they're evolving. So we had a little more confidence in ourselves. But if we weren't so close to our customers, I mean, there were many companies similar to ours that went under during the last year and a half. So I'm glad that we have been able to stay close.
Great. And just a question here from Kathy Lippert, and we didn't give you all buzzers, but feel free to chime in, whoever wants to answer. But it's basically acknowledging that at different stages of development, right, the requirements of what you want to see from product market fit are different, right? From maybe just getting a whiff of it early on to something maybe more conclusive at a point when an insight is going to write a big check. So can anyone talk to just maybe the different level of product market fit that is liked to be seen, maybe at seed, at Series A, or other kind of demarcations of funding?
I'm happy to jump in there. So, like from zero to, like, just using dollar amounts, so to speak, in that initial 0 to $1 million, you're just figuring it out, right? There's no, you're just trying to see if you can get anybody to buy your product and figuring that out. And then that basically, what we look at is like $1 million to $2.5 million. You want to start getting in that part where you're starting to get some traction and starting to get some learnings. Mm-hmm. And then when you get that 2.5 to 5+ million, that's when you really want to have something pretty baked. It doesn't have to be formed, but it's really, how do we scale this beyond use those dollars, those investment dollars to take it from that 2.5 to 5 plus 5 to 12, that kind of scenario. So just like trying to simplify it down, that's kind of the lens we look at things.
Very good. Then a question from Carl Walter, who's one of our investors, says, how do you deal with an investor pushing you, in a direction that you feel is not right? And I'm just shocked that this could ever happen, that an investor would ever, do something like this. But maybe give us an insight just into this, potential theoretical question.
I may get fired for my answer. The politically correct one is, does somebody else want to take it before I don't have a job tomorrow morning?
No, this seems like a
I don't want
good
to get you
question for
fired,
you, David.
We
Sure,
can
I won't
talk
get fired.
about it.
What's that?
I mean, I'll share from experience that I had in the past, which, we had all sorts of investors at different levels. And even though in the grand scheme of things, it was definitely not the Insight Partners level of investors, but it's still like when you're at that very seed stage, like any kind of investor, that their opinions have a lot of weight on you. And we got varying feedback, oftentimes feedback that would conflict with each other. So I think at the end of the day, like you, as a founder, you're tasked with figuring out what's right for your business. That investor isn't tasked with figuring out what's right for your business. You are. And I actually think, so I will say, we always liked to communicate as much as possible with our investors, make sure that their feedback was like, it was heard. They know it was heard. They know it was valued. They know that so there were pieces of feedback that we didn't necessarily agree with, but we would dig into it and then come back to them and at least share, as we've dug in a little bit, our finding and our take on it. And if we believed should go in a different direction, we did, but we shared with them the why. And I think sharing that why, we never ran into a situation where there's conflict then after the fact. Like investors, even if they didn't agree with us, I think they appreciated that we at least took the effort to dig in and then share that why. So that's my take on it. But again, I know once you get to a certain size, like that's a whole nother level. So Samantha, I don't know if you have more to add to that.
Yeah, I think it's the same arc. You always approach those things with humility. You don't want to be the founder or the product person who has this iron locked vision that they can't, hear good ideas or good direction. And so you take that and you do the typical diligence you would, on any sort of idea. And you come back and you solidify how you feel about it and present the evidence one way or the other. So I think it really is the same arc.
I'd agree. I think it's like anything. You take it and if you have a core foundation of just communication and transparency, especially whether it's with your board or your investors, you're doing a good job of that. I think it usually is not problematic and it works itself out.
Excellent. And I'm going to share just a very specific question here. And that is that, for this particular company, saying that we have significant qualitative evidence of a cross-market craving for our hardware product. So deep interest from 30-year market veterans, early and sustained interest from manufacturers, some press interest from people who might otherwise be considered jaded tech writers, and development of some kind of research based on personas, but they're not quite over the hurdle of first significant orders. Does it make sense for them to focus on specific high interest markets, or to still feel out where product market fit is and play the field?
I can say what happened to us and how we succeeded. I guess we did the former. We focused on where we found the most interest and then expanded from there, as opposed to the latter. But I don't know if Mike or David, you have any other thoughts on that from your experience.
Only thing I think, by the way, like this person asking the question could go a different route than what any of us will suggest, and that might be the best route. So I'd say take that with a grain of salt. But in those early days, we probably all have a lot of great qualitative feedback that supports what we want to do because we're doing it, right? Like we're doing the thing we're doing for a reason, and it's probably that we got some good qualitative feedback that there was a need for this. And so we created a solution. So it's a great first step. But that doesn't guarantee that we'll ultimately find product market fit. You might. That first significant order, that is a big deal. So I wouldn't say, oh, you should definitely pivot and go to different markets. But I also wouldn't close the door to trying to, while at the same time you're going down the path you're going, trying to get feedback on these other markets if you felt like they had a potential to be viable too. Because again, chances are that first solution that you come up with might not be the one where you ultimately make it. It's just usually what happens. So that would just be another piece of advice I might put out there too. And yeah, I'm curious what your take is on it, David.
Yeah, my 2 cents is, if you have an order and you're not over that yet, I would get that delivered and make sure that person is, satisfied and happy. And again, you can have the eye on the field and what else is out there, but like anything else, the goal is to, you hear the term raving fans, like you want people that believe in you and your product. And if you're already onto something else without, fulfilling your initial order, for lack of a better term, again, you only have one name, you only have your character, you got to deliver on what you say you're going to do first and foremost. That's my 2 cents.
Very good. So Samantha, you kind of reflected on a couple different experiences early on, and I'm curious, is there something that you might wish you knew at the beginning of your career that you only now know?
All product people are from a different ilk or lineage, and mine happens to be engineering and a technical sort of background. So I think what I would have told the young Samantha, and this goes back to something David was saying before, is that it is okay and healthy to be wrong. Be wrong, be wrong, be wrong, as long as you learn from it. The boundaries are just different when you're taking bets and you're making risks to see if you can get to product market fit than they are if you are, building a piece of software as an engineer, as an engineering team. So I would say just to, it's okay to do that and to have a stomach for it and just learn from it. That's what I would tell 23-year-old Samantha.
Okay, excellent. Well, there are probably 20 more questions I'd like to ask, but I want to be respectful of everybody's time here. And I might throw a final question to David, but also keep the floor open for any crosstalk or thoughts or pushback on any other topics, just because this is a great group to banter with. But David, you mentioned upfront, in all your spare time, you're also an active angel investor. And I'm curious, what you look for at the early stage, the seed stage, to develop a perspective on a company, how they're doing, and just what their likelihood is of getting to product market fit. Because we know they don't have it, right? And you're kind of assessing whether this team, this product, the bank account that they have to get there, right, is likely to be successful. And how do you think about that?
So I learned this the hard way a long time ago. The biggest thing in any of the businesses are the people. I mean, it's just it just starts there. If it's their character, it's their work ethic, it's their ability to execute and persevere, because this shit is hard. There's a saying someone I work with told me about this, and it's like, we love PhDs when we invest or we work with them. And PhDs, not what you think they are, not rocket science. It's poor, hungry, and driven. And so it's people. When we sit and interview, we go down next and we say, okay, well, what's the TAM? What's the addressable market? And who's already in the space and all the other due diligence. But at the end of the day, you're investing in people and their belief your belief in them to surround themselves with really smart, really hungry people that will face failure on a daily, weekly basis and continue to have that passion to learn and be positive and pick themselves up off the ground and just keep going. So like that, if that's one thing I would tell you, like when I first started my first business, I was by myself and thought I didn't need anybody. And I might just be, as I got older, I learned like I can do a lot more things when I have really smart people around me. You just get a lot more done. But it's the who you surround yourself with.
Absolutely. Terrific. Well, I think that is probably a good place for us to put an exclamation point on the conversation. But I wanted to thank each of you again, Samantha, Mike, and David, and also to thank once again PNC for sponsoring this particular event and the full 2021 Investor Insight Series. So please do, for everyone watching, let us know what you think. We often do surveys and have follow-up events. So we'd love to have you join us in the future. And I think we're hopeful that, you know, at North Coast Ventures, we can be some small part of helping to build and helping to support the entrepreneurial community here in the region, because it is really hard. We've learned some lessons the hard way, and we'd love to see more people engaged with more support and more resources, just to increase the likelihood of seeing more successful startups. So we thank you all again for joining us, and look forward to having you at an event here at some point soon.
Thanks, everybody.
Thanks,
Take care, everyone.
Thanks, everybody.